Okay, now we're going to work on the payroll accrual journal entry. Um, the payroll accrual journal entry is an Excel spreadsheet. It's in the Dropbox in the accounting folder under month end, and it is called Payroll Accrual Workbook.
Okay.
So every month I come out here and I right click on this tab and I click on move or copy, create a copy, and rename it to be the current month that I'm working on. And take this here. These are zeroed out. All right, so what we're left is, this is my salaried employees and their salary, and I enter how many days of the month that I am creating this payroll accrual for. So, for example, the purpose of the payroll accrual is to try to keep the cost for the salary to match the revenue for the month. So, for example, in the month of September, this whole last pay period, September the 14th through September the 27th, was paid on this week here, and the actual payroll date was October the 1st. So when we processed this payroll for October the 1st, it was all September hours, September payroll. So this entire payroll got pushed back into September. And then the next pay period actually had these 3 days as well. So we had Monday, Tuesday, Wednesday, which was part of, if we look at, this is the payroll week and this was the payroll date.
Yep.
But we had Monday, Tuesday, and Wednesday, the 28th through the 11th was in this pay period. So on my salaried employees, I had 13 days worth of their payroll that I needed to push back into that prior period. And this right here, this just summarizes my salesmen, because these two guys are not broke out individually on the P&L, whereas Shannon French's payroll, Tony's, Shannon Key, Joe's, those payrolls are all broken out separately on the P&L. If we look at it, let's look at last month. Down here under salaries, we have the install manager, the office manager. Tony is recorded as officer. And then up here, under cost of goods salary, we have sales commissions. This is where Michael and Ken's salary goes. So that is why I have this right here, just kind of subtotals that, so I know how much to put that entry for. I have bonuses highlighted in yellow because we only do bonuses once a month, and so I have to close the month before I can enter these bonus amounts. So this is kind of like my reminder to make sure that I've pulled those bonus amounts, not to overlook it, because this is not going to be on every payroll. And then commissions, I have to show you how I fill all this stuff in. My secretaries are broke out by what their hourly rate and their overtime rate is. And then these are the add-on replacement guys, and they have multiple different types of salaries. And then these are the service guys and their hourly rates. The easiest thing for me to do for that whole first pay period is to pull up my employee data spreadsheet, because the entire first pay period, the whole 2 weeks of it, gets pushed back into this. So Out here in the accounting folder, under payroll, is our payroll data template, which has everybody's hours from the October 1st payroll. So I'm just going to bring this over here and resize these screens so we can see them. Alright, so it'll be easier to go ahead and start with my secretaries, except that I don't have them in alphabetical order, but over here they're in order how they are on the payroll. So Debbie had 75 hours and she did not have any overtime. So on Debbie's, I'm just going to plug in her 75 hours and I have 0 overtime. Julie, I have 75.28 and I have 1 hour of overtime. And then I have Tara right here, 66.21 and 0 hours of overtime. And then we're going to do the same thing with the rest of my guys down here, show you all their different pay rates. Daniel has 2 different kinds of pay rates because week 1 of the pay period he qualified for piece pay. So he has this regular pay and overtime pay for his piece pay. And then he has cost of goods and regular overtime for his second pay period. So these are the piece pay rates that it calculated. So on this one, this first one where it says hourly and overtime, this is his cost of goods. So he's got 40 hours here and 1.38 hours on his overtime. Now overtime, this matches because I already corrected it, but the overtime is in yellow, and so sometimes overtime changes. If he had a spiff, if we had paid him a spiff, well, that was a bit high. See how it changes his overtime calculation? The labor laws state that any amounts that we pay for earnings have to be taken into consideration for overtime calculation. So even though this wasn't an hourly rate, we paid him a bonus for some sales, we have to add this into his overtime calculation to legally pay him. So it changes. He didn't have any spiffs this pay period, so his overtime rate is just 1.5 of his regular rate. So that rate's correct. Piece pay is a whole different thing. Piece pay is where we calculate what his sold days were and we pay him based on performance. The faster he gets an install job done, the more money he makes. So if he qualifies for piece pay that week, that means that his piece pay salary calculated to be more than what his hourly rate was, and so we pay him his piece pay rate. So it's always in the employee's favor. If Daniel's piece pay had calculated to be less than what his hourly rate is, which is this $12.50 an hour, then we would not have paid him piece pay. We would have paid him hourly. So he never loses. He always wins. If he gets it done faster, he benefits. If something happened and it slowed him down, he at least gets paid what his normal pay rate is. So this is set up to automatically calculate what his, this I have to manually enter from his piece pay calculation that his manager gives me. And then the overtime rate automatically calculates. So the way that piece pay works is he gets paid his flat piece pay rate for all of his hours, and then he gets paid an overtime premium for the hours over 40 hours. And this is complicated, and I will go over it with you when we go over payroll next week. But I just kind of wanted to briefly explain it while we're talking about doing this journal entry. So over here, I have to put his whole 55.39 hours and his overtime premium hours. And then I would have had to have changed these dollar amounts because they would have been different. If we went and looked back at the accrual from August, his piece pay rate was a different rate. Here it was $17.30, whereas in September it's $14.65.
Okay.
So it's always different. And we're going to be changing it based on this spreadsheet. Michael Raymer is a fairly new employee. He's only been working with us a little while, so Michael doesn't qualify for piece pay yet. So all of his hours are just regular hours. He is, he has 80 regular hours and 20 overtime hours. And then the same thing with Michael Boone. He is a brand new employee. They both started the same time. And he does not have any he doesn't qualify for piece pay yet either. Steven does. He's a lead installer. And so Steven actually qualified for piece pay both weeks. So I ended up having to add this to him, and I didn't label it correctly. So I had to add his. So he had 51.28 that week, and his 11.28 overtime hours, and the same thing with his second week. Oops, why did I put negative? Goodness gracious, my fingers are not working today. And then now we scroll down to our service techs, and for our service techs we have Ernest, and service techs don't get paid on a piece pay rate. They just get their hourly rate and their overhead. But you can see that Ernest had spiffs in here. So Ernest's overtime rate changed. And I gotta change that on my spreadsheet because of how much spiffs he had. He had $110 in spiffs. And then Jamie had the same thing. Jamie has 80 hours and 11.10 hours, and then his overtime rate is different because of his spiffs right here.
Mm-hmm.
And Paul is on the bottom. Paul is actually William. And these are Paul's hours and Paul's overtime rate. All right, so that was easy. Oh, we didn't do the commissions. Ken and Michael's commissions are listed right here, and we have to calculate them. He gets 3.31 sold days times $330, which is $1,092.30, and 1.03 times his 500, which is $515. And the sum of those two, let's see, we could put this in here as the $1092.30 plus $515, just in case I ever have to come back and figure out what I did. Michael Jarrett only had the one commission rate, which is 3.3, so his is 330 times 3.3, which puts his commission at $1,089. All right, so on a normal pay period, we would be done now, but because this one was weird, we had 3 days in the next pay period that also belonged in this. Now I have to get the employee's time for those 3 days. But I'm going to go ahead and show you the commissions since we're on the commissions. Let's look back over here at this spreadsheet. 10/15. So this is the next pay period. And Ken was on vacation, and he forgot to turn in his commissions before he went on vacation, and I could not get him on the phone or over email, so I didn't pay Ken any commissions this last pay period because he didn't turn anything in. So this part of his salary, his base pay, is already calculated up here in our 13 days. It divided his salary and added those 3 days in there. So we don't have to worry about anything for Ken. This is his payroll accrual. But Michael Jarrett, right here, he did have commissions. Now, I can't just assume that all of this commission goes into the payroll accrual because this was a 2-week pay period, and out of that, only 3 days is September. So what I have to do for Michael is I have to go back and look at his payroll. They're called job cost sheets. So I'm going to pull up my email because I actually saved it in my email. Normally I would have saved it in the folder, but I already deleted it and because I wasn't thinking. It's normally his job cost sheets are saved out here under, let me show you where. They are saved right here in the accounting folder. I'll leave them here until I do the payroll accrual, but I got a little carried away and I deleted it already. So in my email, I just have to go and pull up my email that I sent to him at the end of pay period. Oh, I'm looking in the wrong email. And this is his payroll. It shows the 2.08. So if we were to look back at our little spreadsheet here, 2.08 is what I paid him for last pay period. And these are his job cost sheets that are attached. So I have to open it and look at his job cost sheets. And what I'm looking for is, was this installed in September? If it was installed in September, that means my revenue is in September, and that means my commission needs to be in September. So this one for Carol Newroy, or Nuri, however you say that, is in September. This is his job cost sheet, and this is my job report where I went in and checked and made sure that he qualified. And then the next one is this Annie Rittman. Hers shows September. So this one was installed in September as well. And the last one, Wendell Mayo, is also September. So really, all of Michael Jarrett's commission on that payroll, even though it was 2 weeks, most of it was in October, all of it was September installs. They can't get paid their commission until this happens right here. The customer has to fully pay for the job before the salesman gets his commission. So he didn't get it on the last pay period because they had just completed this install on September the 30th. And I actually ran payroll on September the 28th. And the pay period was October the 1st. So we weren't even done with this when we did that last payroll, which is why it got kicked back to this one. So if we go back to our spreadsheet, this whole 2.8 is September commissions. So 2.08 times his 330 is another 686.40 that we have to add to our payroll accrual for Michael Jarrett. Now we got to look at all of these secretaries. We have the same thing. We have 3 days, the 28th, 29th, and 30th. that are part of this last pay period, but they should be in September. So the easiest thing to do on them is to look at their timesheet and pull those hours out. Again, normally their timesheet is saved out here in this CSR timesheet folder. But what I do at the end of every pay period is I attach it to the payroll. So if we go into QuickBooks and we go to Employees, Employee Center, and we go to Debbie's paycheck, right here as an attachment is her timesheets. So I already attached them and deleted them out of that folder. Again, I did it all a little too fast. But I can open her timesheet and just add up her hours for those 3 days. $22.77. I'm going to double check that, make sure I didn't add it wrong. Yep, 22.77. So I'm going to go back to my spreadsheet, to Debbie, and add those hours in. She did not have any overtime Monday, Tuesday, and Wednesday, so I don't have to worry about it being on overtime. And now I need to look at Julie's. It's a little bit time consuming, and if I had left them out there in the folder, I wouldn't have to go search them down right now, but I went ahead and attached them and deleted them out of habit, and didn't think about what I was doing. She has 22.97 hours. I don't normally have to go back through a pay period in the middle of the month. Like this is October the 15th. The fact that it has 3 days of the payroll in it is unusual. It's kind of a different cycle every month. Did I just put that under Tara? I did. Those were Julie's hours. 22.97. This is what I get for having them out of order. Alright, now I'm looking at Tara's. Tara has this weird one right here. It doesn't carry over here to the end. She said PTO vacation not payable, but this was not true. It wasn't vacation. I don't know why they did it like this. Tara went to a training meeting off-site, and for some reason she wanted to pay her for these hours. I don't know why she entered it as PTO. She should have just entered it and put a note out beside it that it was off-site training. But instead she chose to use one of our vacation things. And Tara doesn't qualify for vacation yet because she hasn't been here a year. So, again, this was all weird. But these are payable hours. When I saw it on the timesheet, I called Shannon Key and I said, Tara doesn't have vacation. Why did you put vacation on here? And that's when she explained it to me.
Okay.
So, otherwise, I would have not paid her for those hours, especially since she has this not payable in here. So, all of that was kind of just a mistake. But Tara's hours are 20.67. So, we are going to go back to this and add Tara's hours. All right, the technicians, we have to run a tech timesheet through Aquin to do the technicians. So we're going to log into Aquin. The reason we have to do that is because in QuickBooks, all we have is the total amount of hours. We don't have it broken down by days. So if we were to look at his paycheck, all we would see is the total amount of hours that he had. And his time is kept up with in Aquin, not in QuickBooks. Just like the girls, their time is kept up with on a program called Time Wizard. It's a program that they log into from their desk, kind of like you log into Time Doctor. They log into Time Wizard. And Time Wizard is a free program that they use.
Of course, should be free.
Yes. So when we log into Aquawin, we go to Reports, Technician, Technician Time, and we're going to select it for the work date of 9/28 through 9/30, because that's all we need for the payroll accrual. I always click on show subtotal. It's a habit. For this purpose, I don't need it. Show subtotal breaks out their individual days, but I don't need their individual days for what we're doing right now. But I'm just going to do it out of habit. We select our work date, and then we click the little arrow, and it throws it into our selection criteria, and then we click Run. And it's going to go out here and pull their time.
Okay.
Yeah, it's a little slow. We have the same problem with using the payroll data template. I can't really use this to pull their hours because it's their hours for the whole pay period. So if we were to look at like Daniel, all it tells us is that he worked 78 hours for the whole pay period. It doesn't tell us how many of those hours were Monday, Tuesday, and Wednesday. But I can tell you that Daniel and Stephen are the only ones who qualify for piece pay. And this particular pay period, neither one of them met their piece pay objectives. So all of their salary is just their regular rate. So now that we've run this, we're just going to transfer over all of these hours for these 3 days for all of these employees to that spreadsheet. And I am not going to waste our time doing it because technically I already did it because I had to do it yesterday. So now if we look at our spreadsheet, ta-da, all the guys' hours are on here. But really all I did was add their hours here. So you can see that one says 21.5. If we look at Daniel's, there's his 21.5 hours. So I transferred all those hours over to the spreadsheet for each of the guys. And so the only thing over here on this one that we were using as our example that we hadn't done yet was bonuses. So I'm going to show you how we do the bonuses real quick.
Okay.
They each have different bonus criteria. Shannon Keys is the easiest. She gets paid 1% if we exceed our sales for the same month in the previous year. So I think I have a favorite created for that under my GM monthly, and it is this profit and loss last month compared to last year.
Okay.
And of course it's not going to work. I've been having problems with that one. I've had to recreate it like 3 or 4 times. For some reason it just doesn't want to save it. As you can see, I called it new because I keep recreating it and it keeps breaking. But it's easy. It's just run the profit and loss and you tell it you want last month. And then you click on customize report and you want to compare the previous year and just tell it okay. And when you do, it's showing me September of this year as compared to September of last year. And my difference is a positive amount, so we did exceed our sales for last year. So Shannon Key gets 1% of this.
Wow.
So her bonus is $491.02. So if we look at the spreadsheet, that's what I put on there, $491.02. So that's what she'll get as her bonus. She won't get it till the next pay period because I just closed September, so I didn't have it calculated in time for this previous payroll. So she'll get this, and that's why we're putting it on this payroll accrual spreadsheet, because we want to push this expense back into September because she earned it in September.
Okay.
Joe's is the next one that's a little bit easier to calculate, so we're going to move on to Joe's. Joe gets paid based on sold days, so we use our Access report for that. So we open Access and we open our ACOIN database, and it's this report right here that's called Install Sold Days. And I have all of these bonus calculations saved in a my email under payroll. This right here explains how the calculation is done for her, and this one explains how the calculation is done for him. This is just how I've chosen to save them. You might want to put it all in a spreadsheet, but I created this payroll folder so that every pay period, when somebody sends me an email about changes that need to happen for payroll, like these were deductions that needed to come out during this pay period. This was them telling me that Tara's, she quit and this is her last day, so I have to make sure that on her last paycheck, I do her last paycheck right. This was my reminder to deduct Ken's vacation time. So every 2 weeks, I'm collecting notes about the upcoming pay period that people give me. So this is where I also have my bonus reminders. Like this tells me how I pay Michelle. This tells me how I pay Angelie, even though I spelled your name wrong. And then these were deductions I had to start taking out of Michael Boone's paycheck. So it made sense to me to put them here because this is where I go when I'm reviewing payroll at the end to make sure that I got everything. I come in here and I look over these and then I delete them as I've completed them. And so these are actually notes for the next pay period. This one too. And these, even though I did deduct them this pay period, I still haven't made the journal entries for to move the expense from Verizon out of there. So I got to remember to do that. And that's why I stuck that there. And I haven't done it yet. But anyway, so for Joe, we're going to run this install sold days report. And we are doing the month of September. So I'm going to enter 09/01/2015. And my end date 09/30/2015. And it's very slow too. Hold on one. All right, so the install sold day report calculates every install that they had for the month of September and what the sold day value was of it. And if we look at Joe's bonus structure, it's I think it says, where's it at? To be included on payroll. This was just an example of one for him, but I believe his actual bonus structure states that he has to have at least 16 sold days. Let's see if I have pay structure for salesman, mobile login, keys bonus, bonus plan. All right, this is the one for Joe. It says, going forward, as long as we break 18 sold days in a month, he gets to have his bonus structure. And his bonus structure is $30 per sold day. But he has to meet a minimum of 18 sold days. So if we look back at this, he made 18.24. So he just barely qualified. So we give him that 18.24 times $30, which is $547.30. But I'm sorry, 547.20. But there is a second step to it. He also gets an extra $10 bonus per sold day if he keeps his labor below what his annual labor percentage has been for the year. So if we look at this other example that we have in here for Joe, right here I've shown what his year-to-date labor is as of, this would have been as of July, and what his August labor was to show whether or not he qualified for it. So on this one, his year-to-date labor through July was 16.7, which is listed right here under direct labor, and his August labor was 15.1. So he qualified. His goal is just to be less than that amount. So because he qualified, he got the extra $10 labor premium on his bonus, but that was for August. All right, so if we go back and we look at September, let's see if I have this in here. Add-on replacement profit and loss for last month. So this is the add-on department, and right here it says direct labor at 23%. And so the other report that we have to look at is year-to-date. And this one, we have to change it from January to July. We got to change it to January to August. And his direct labor percentage is 16.4. That's what he has to stay under. But if we look over here, he went to 23. So he did not qualify for his bonus premium of the extra $10 per sold day. So that he's not going to be happy about that. But that is because he hired 2 new employees this pay period. So that's what's hurting him. So if we go back to our payroll accrual workbook, all he got was the 547.20 for his for meeting his sold days, his 18.24 sold days. So that is how we calculate Joe's. Now Shannon's is even more complicated. Shannon's, he has 4 separate criteria that he has to meet. 2 of them he calculates. So he sent me his September goals on Wednesday. And we have to look at his spreadsheet. Right here, this total call pace. This was the budgeted amount of sold hours that the guys were supposed to have for the month. I'm sorry, their pace. Oh, crap. Now I can't remember if it's sold hours. Yeah, it's the sold hours. I'm sorry, it's not that one. This is the amount of sold hours that they were supposed to hit for the month, 70 sold hours, and they actually hit 71.58. So they did exceed it. So he qualifies for his bonus for this. He gets $100 just because they exceeded what their budget was. Down here under tech leads, they were supposed to create 14 tech leads for the month, and they only created 12, so they did not meet this criteria. So he only gets $100 for meeting that bonus goal right there. So if we come look at Shannon French, he has 4 separate bonus criteria, and this was August. So again, this is just an example of August. In August, his sold hour goal was 183, and he fell way behind, and he didn't get it. But for September, he did. In his tech leads for August, he didn't hit that either. But now the last 2 parts of his goal is for his labor and his materials to be less than the percentages that Tony assigned. So labor has to be less than 27.3, and materials has to be less than 23.3. So we go back to QuickBooks, and we run these 2 under memorized. GM monthly, service profit and loss last month. And these are the only two numbers that we're looking at right here. This 29.3 and this 17.3. Oh, I think I had that wrong on my list. I think I put that he qualified for that, but it doesn't look like he did. Let me go back and look at what I did. Anyway, let's go to the email. So his labor goal is 27.3 and his materials are 23.3. So he did not qualify for labor, but he did qualify for materials. And I did do that wrong. I calculated that wrong. So it should only be 200. So out of the 4 criterias, he only met 2 of them. And I'll end up preparing this. I'm going to prepare one of these emails for him for September, and I'll do the same thing. I'm going to put in here what his goal was and what he met, and what his goal was and what he met. And then when I'm done with that, I save it in my payroll folder so that I make sure that I give that to him. But I just barely had time to get that calculated yesterday before I closed month end, and I'll have to have this ready before next pay period. But it'll show, and I usually highlighted yellow the ones that he met those objectives so he can see them. And Shannon French has an additional bonus for at the end of the year. Over the course of the year, as long as he meets 3 out of these 4 objectives on a regular basis throughout the year, at the end of the year, he can get another bonus for all those bonuses that he didn't get. He has the opportunity to re-qualify for them at the end of the year based on his annual numbers. So he doesn't necessarily lose this money. He just has to make the overall year come out with those percentages underneath them, and he can get the ones that he missed. So, again, it's complicated.
Yeah, I can see that. Have to review a lot.
Yes, yes. Most of this payroll accrual is easy. It's this bonus calculation that's complicated. But now that we got the bonuses all calculated and everything on the payroll accrual, all we have to do now is enter it. So I do the same thing here that I do with that other journal entry. I pull it up, and I want to look at last month because this was September that we're working in. And I usually just open my labor file. And the first thing that I want to do is I want to reverse my payroll accrual for last month. So I change my date here to August the 31st. And I pull up my payroll accrual that I had at the end of the month. So this was the one for August. And I just click the reverse button. And when I click reverse, I date it September the 1st. And it moves all these items from debits to credits, and it moves this one from credit to debit. So if you look at September the 1st right here, this is where I reversed it. And it automatically shows reversing, and everything is on the opposite sides. All right, and then I open it again, and I click Create Copy. And when I click Create Copy, I date it September the 30th, and I change my payroll accrual name to be 0915 for September. So let's go open that one. And then I enter all those entries off my spreadsheet. And all I'm entering is my totals in each section. So Shannon French, $2,559.90, and that was his dollar amount. So on and so forth. So I'm just carrying over these amounts, like the technicians. This is the add-on technicians, $6,613.38, $6,613.38. I'm just transposing those numbers over to this journal entry, and then I save it. And so if we look at the balance sheet, Let's look at the balance sheet as of September the 30th. Down here where my payroll accrual is, right here is where my payroll accrual is. Oops, too far. January. What should happen every month is at the beginning of the month, I'm reversing the payroll accrual and it zeroes out. And at the end of the month, I'm creating the new payroll accrual for January, taking whatever was paid in February and but belonged in January and pushing it into January. And then February the 1st, I reversed it. February the 28th, I created the new one. And this happened all year long. And here we are at the end of September with our new payroll accrual. So I can go ahead and reverse this for October. I'm just going to click reverse. It's dated October the 1st. I'm going to save it. And so let me refresh that. Oh, I got to change this to include October the 1st. There we go. So now my balance sheet and my payroll accrual is 0. I deducted this $28,000 back out of October because that $28,000 was paid and is showing on my P&L for October, but I pushed it back into September. So I have to make sure that I reverse that journal entry. So my balance sheet for October the 1st now shows that I don't have a payroll accrual at all. And that's what we want. We just, every month, we're going to create the new one, reverse out the old one, create the new one, reverse out the old one. And we keep doing that all year long to make sure that our expenses are in the same month as our revenue.
Okay.
All right, so all of that humongous, long explanation. Do you have any questions for me?
I'm still overwhelmed, to be honest.
I'm sorry,
But
say that again.
I'm kind of overwhelmed at the moment. But I'm curious about where Michelle's pay is.
Michelle's not, I don't actually do a payroll accrual for her. I actually record hers in the right month because she's not going through payroll. I do hers as a bill, and then I do the bill payment. So hers is captured in the right month. I don't have to do an accrual and a reversal.
How about my salary? Is it the same thing as Michelle's?
Yes, I would just create a bill for it, and it would be in the right period.
Okay.
The same thing with mine because I'm a subcontract employee. I just create a bill for it and put it in September, and then I pay it in October.
All right.
I'm trying to think of, and yours is going to go under, yours goes under salaries accounting, and then Michelle, I believe, nope, Michelle's in secretary, or is she in other? I can't remember. Monica is in. Monica's a whole nother one. Michelle is in with secretaries, right here. So you can see I've got her 914 to 927. Monica McQuaid is a whole nother subcontract employee. She, every phone conversation that they have at Cooper Heating and Air is recorded. But they call it the money line. The main line 248-4665, that's the line that most everybody calls in on when they're calling in to get air conditioning service. Monica listens to all those phone recordings, and she does what's called call grading. She grades the call as to whether or not the girls asked the questions that they were supposed to ask. Did they get the email address? Did they find out the year of the unit? Did they use good customer service skills? Were they pleasant? Did they show compassion for the customer and the fact that their air conditioning or their heating is broke? So they get graded on all of this, and that is Monica's job. She listens to the phone calls, she grades them, and then she sends us a bill for her hours bi-monthly. So we get it on the first and I think it's the first and the 15th. And
Mhm.
so Monica falls right here into salaries other, is where I have her salaries for the month. And that's all she does. Occasionally, well, that's not true. We do a monthly drug-free workplace newsletter, and also another type of video and newsletter, and she helps Tony with those. The drug-free workplace newsletter she does all by herself. She downloads it off the website and she sends it out once a month. And occasionally Tony will give her some other little side jobs where she does some analysis for him, but mostly that's what she does, is listen to those calls and call grades them. And she does a really good job at it. But I think that's all of our um, salary type pay that we have, is all of that. And I pay Monica. She sends me an email with her hours, and I create a bill for her, and then I pay her bill using direct deposit. Whereas you and Michelle, I pay y'all's using PayPal. So Monica and mine's both come directly out of the checking account. Y'all's is billed through PayPal and then auto debits the checking account. So I get an email about that one and I create the check for it.